So is Alibaba the quote-unquote Chinese Amazon, and are they destined to be the next trillion-dollar company? And why do I have so much confidence in them that I just bought $20,000 worth of Alibaba shares? Now, before we get into the juicy details, please absolutely obliterate that like button, smash it to smithereens for the YouTube algorithm, as it helps out my channel tremendously, and I put in a lot of time and effort to make these videos as educational and entertaining as possible for you guys. So it would mean a lot to me. Thank you. So Alibaba, ticker symbol BABA, is another one out of the three companies that I feel are absolute category disruptors in their respective industries that you should definitely consider scooping up, as they will likely be available at steep discounts very soon in the near future. And I'll be going into detail as to why I think that's going to happen and exactly when it will likely occur. So get excited. Alright, so we got a lot to cover, so let's get right into it. So you guys really loved the first two videos in the series that I did, where I went into an extreme amount of details as to why I've been investing a lot of money into both Tesla and Shopify. So if you missed either of those two videos and want to check them out, links will be in the description box below. So now for this video, I'm going to break down the third and final company that I've been investing heavily in and will continue buying more shares throughout this recession. And that company is Alibaba. Now, for those of you who might not be too familiar with Alibaba, the easiest way that I can put it is to think of them as the Amazon of the East, because both companies dabble in a little bit of everything, including e-commerce, banking, technology, and even cloud computing. And that's just to name a few of the markets that Alibaba serves. And their numbers are equally as staggering. 55.9% of all online retail sales in China are captured by Alibaba. Just to put that in perspective, Amazon, which is an absolute beast, only captures 37.7% of the US online retail sales. And don't get me wrong, both of those numbers are just ridiculous and absolute world beaters. But it just puts into perspective just how dominant Alibaba's presence is in China. Now, Alibaba's revenue growth year over year is equally as impressive. In 2018, they reported revenue of 39 billion, which was a 73% increase from 2017. And in 2019, they reported revenue of 56 billion, which is a 41% increase from 2018. Guys, these numbers are insane. Very few companies in the world can pull off this kind of growth, and let alone companies the size of Alibaba, who is currently sitting at a market cap around 563 billion and trading at about $210 per share as of recording this video. And how's this for numbers? During Alibaba's Singles Day, which is kind of like the equivalent of Amazon's Prime Day celebration, Alibaba did $38 billion in sales in a single day during their shopping festival, while Prime Day, which is a 2-day event, so twice as long, did only an estimated $7 billion in sales. So Alibaba's Singles Day did almost double that in the first hour alone. Also, fun fact, Alibaba actually set the record for the biggest IPO in history back in 2014 with an initial public offering of $25 billion, which shattered all previously held records.
They should be careful of us.
So Alibaba's e-commerce components are split up into three main sites: Taobao, Tmall, and Alibaba.com. So Taobao focuses more on customer to customer, while Tmall does business to customers. And finally, Alibaba is for business to business. So let's break this down even further so you can really understand and grasp how it all works. So let's say if you lived in Beijing and wanted to buy a toaster, you would log into Taobao just like you would Amazon, and after a few minutes, you found the perfect toaster being sold by John, who lives in Shanghai. And when you're ready to pay, you don't use a credit card, you use Alipay to pay, which is very similar to using PayPal. But so where did John get the toaster from? Well, he bought them in bulk from Matt on Alibaba, who owns a production facility in Shanghai, which produces kitchen appliances and sells them wholesale. But it doesn't stop there. Matt can also list the toasters on AliExpress, which sells to customers outside of China and is extremely popular in the dropshipping community. So that means if Suzanne, who lives in New York, wants to buy a toaster, she can get it directly from Matt in Shanghai for a steep discount compared to what she would have paid in America. And remember guys, all this was done without ever leaving the Alibaba platform. Now, combined, all three sites have over 750 million active users and host millions of merchants and businesses. Guys, these numbers are ginormous, as these are like almost unfathomable and hard to even truly comprehend. And they don't just stop with e-commerce. In fact, I haven't even mentioned one of the most exciting and fastest growing segments of their operations, which is cloud computing, where they just announced that they will be investing a staggering $28 billion into over the next 3 years. So as you may already know, Amazon, who has AWS as their cloud computing subsidiary, and it's one of their biggest growth drivers that has made their stock price soar over recent years because it's such a profitable business model and it's infinitely scalable. Now, AWS brought in almost $10 billion for Amazon in the last quarter alone, while Alibaba's cloud computing brought in only about $1.5 billion in the last quarter. But what you have to factor in is that AWS had about a 5 to 10 year head start because Alibaba only really started taking cloud computing seriously around 2015. Also, what I didn't mention is that 1.5 billion they brought in last quarter from cloud computing actually signifies a 62% growth in revenue from cloud computing, which just shows the massive potential that cloud computing has for Alibaba in the long term, especially now that they're investing a whopping $28 billion into their cloud infrastructure. An extremely smart and major strategic chess move that Amazon should be watching very closely, and in my opinion, because that can change the landscape tremendously over the next couple of years.
The world is getting so small. If you cannot stop it, improve it.
Now, if you know Jack Ma, who is the founder of Alibaba, and you've seen him speak, he has always been an unbelievable long-term visionary, just like Jeff Bezos. Now, even though Jack has recently stepped down from his chairman position, it is clear that he has absolutely ingrained that culture of having a long-term mindset throughout the whole organization, from the top down, and his vision for the company will live on forever. And the company has an unbelievable long-term vision. If you hear any single one of their upper management team speak, from the CEO all the way down to the CFO, it's always with an extreme focus for the long-term vision. And they all sound like a splitting image of Jack Ma. They are all about going after the hard opportunities and the long opportunities, the long-term opportunities. Once you understand this, it's clear to see why this company has been built up the way it has been, and why are they seeing so much massive growth, and why they will continue to grow and succeed well into the faraway future. Thus, it's no surprise why this company is already worth nearly $600 trillion, and why, in my opinion, they are destined to be the next trillion-dollar company.
Forget about the competition today. It's like a 10,000 meters running. For the first 200 meters, don't think that guy is a competitor. Keep on running. 3,000 meters later, you will know who's the competitor.
Also, not to mention that for a company that is so long-term focused and not really even focused right now on the short-term profits, they are already far more profitable than Amazon. Just take a look at their net income for 2019. It was almost $25 billion, which is a 130% increase year over year, versus Amazon, whose net income was only about $12 billion, which is only a 15% increase year over year. And when you factor in the fact that Amazon brings in 4 times the revenue than Alibaba brings in, that makes this feat even more incredible, that with only 1/4 of the revenue, they are already 2 times more profitable than Amazon. Now, that is absolutely phenomenal. Now, don't get me wrong, Amazon is an incredible company and will continue to be an incredible company for many years to come. And as I already mentioned in my previous video, Amazon has been one of the biggest and most lucrative positions I hold in my holdings for many years now. But what's so enticing about Alibaba is that you're able to get pretty much as close as humanly possible of a company as Amazon for a far steeper discount and at a far more reasonable multiple, with almost equal upside potential, and currently trading at only about a 23 multiple, which is an absolute steal for a high growth company like Alibaba versus Amazon, which is trading at a 100+ multiple. And keep in mind, guys, that the only reason Alibaba is trading at such a low multiple is primarily because they are a Chinese company. So they don't have the same trust factor with investors as American companies do, obviously. And honestly, people just simply don't know too much about their business model because it's a foreign company. So most people just stick with what they know. But Alibaba has had a spotless record for well over 20 years now, and their financial statements are absolutely immaculate. And now for the million-dollar question that all of you have been waiting for. But when should you buy into this stock or any of our 3 category disrupting stocks for that matter? Now, I don't know if you guys saw this or not, but just a few days ago, something happened that has never happened in all of history and that I never thought I'd see. The US price of crude oil fell to $0. In fact, it fell below that to negative numbers. At one point, it had fallen all the way down to negative $37.63 for a barrel of oil. God damn, who would have ever thought that something like that was even remotely possible? That a roll of toilet paper would be far more valuable than a barrel of oil. In fact, people were willing to pay you just to take delivery of oil, which is just madness. Now, I'm not going to go into extreme details about this, but basically what happened was a futures contract that was expiring to take delivery of oil went negative because what is oil used for primarily? Gasoline. And at a time when the only traveling that 95% of the world is doing is going from their bed to their couch and then back to their bed, the demand for oil has just absolutely plummeted. And they are simply running out of places to even store all of those barrels of oil. So at this point, they're just willing to pay people just to take the oil off of their hands because nobody has anywhere to store all the barrels. So factor this new development in with all the craziness that's already going on in the world, plus the fact that we're experiencing record-breaking unemployment levels. And not to mention that throughout all this craziness, the markets have just been recovering way too fast, in my opinion, as if nothing's going on. Primarily because the Fed has just been printing money like there's no tomorrow. So I'm starting to feel more and more bearish and inclined to think that we are in for another major market crash. And that, in fact, this is going to end up being a much more elongated recession than a lot of people are factoring in. So expect a ton of volatility within the next month or two. So my recommendation is to practice patience right now because there are just way too many unknowns right now, and will likely be some massive buying opportunities coming up in the very near future. So I'm currently sitting on a good amount of cash myself and just waiting for the right time to strike. So that's my take on this whole situation, and I hope you guys enjoyed this video. As always, I'd love to know your take on what's going on and what you're planning to do going forward. But without a doubt, it's going to be an extremely interesting next couple of months. So let's see what happens. Make sure to subscribe to the channel because I release one value-packed video every single week. And please smash that thumbs up button. But with that being said, Thank you guys so much for watching. I appreciate all of you, and I hope you all have a wonderful rest of your week.